The California housing market is in big trouble. This is because we're seeing a giant decrease in home sales, pending home sales, as well as a giant increase of active listings or housing supply. Also, according to the California Association of Realtors, they actually just released this report today, and they stated the following. California's housing market continued a downshift in June as housing demand cooled further to levels not seen in the past 2 years and logged its biggest dip since May 2020. This was just announced today at the time of this video from the California Association of Realtors. So with that said, I'm going to take a deep dive into what we're seeing right now for our housing market in California, because this is pretty eye-opening, some pretty alarming trends we're seeing right now. So hope you guys enjoyed today's video, and of course if you do, then please hit the like button. I greatly appreciate that. Also consider subscribing as well. I post frequent housing market updates so you guys can make a more informed decision about where you should buy or sell a house. So with that said, let's go ahead and dive in. And by the way, this is part one of a 2-part video series that I normally do for the California housing market. I basically post 1 to 3 videos regarding the California housing market here. So stay tuned for some additional videos regarding that. I'm gonna be sharing how each of the cities in California fared, because of course, there's some very big differences here. So with that said, let's go ahead and dive right into the video here. And I actually want to share some slides with you guys today regarding the latest trends in California right now. So here's an overall snapshot of the state. Again, this is for June 2022. Take a look at this. So existing home sales, in other words, these are houses that are not brand new. These are existing or resale houses. Look at this, decreased 20.9% from a year ago. So we've had a giant decrease in the number of home sales from a year ago, also decreasing by 10.9% year to date as well. Meanwhile, home prices, or the median sold price in California, actually decreased. It decreased to $863,000. And also compared to a year ago, home prices only gained 5.4%. Looking back over the past, 3 months approximately, this number was approximately 15% and not 5.4%. So we're approaching more normal year-over-year home price appreciation in California, but a giant decrease compared to 1 month ago, and more on that here in just a little bit. Meanwhile, the unsold inventory index is at 2.5 months. Look at that, 47.1% increase from June 2021, a giant increase in the unsold inventory index. What this basically means here is that if there are no new houses being listed for sale, then all the houses listed for sale right now would be sold in 2.5 months. This is actually quite higher than earlier parts of this year. In the early parts of this year, I think it was in January, the unsold inventory index was approximately 1.7 months. So still low levels, historically speaking, but a giant increase compared to a month ago, and also compared to last year as well. And speaking of above or below historical levels as well, the median days on the market is 11 days. So houses still selling very quickly on average. But look at this increase, 37.5% from a year ago. So median days on the market has increased. I think it was 8 days on the market was the all-time record low, and now we're at 11 days. Okay, so let's have a look at how each of the regions in California fared, because there's some very large differences here. But I also want to focus here on this 20.9% number here, the decrease in home sales statewide. So in Southern California, look at this, decreased by 27.1% for home sales. Again, the national average is approximately 21%. So home sales are decreasing at a much higher rate than the state average. I want to say national average, but this is the state average, 27.1% in SoCal. And the existing home price, $830,000, increasing by 8.4%, to more than the state average. Unsold inventory index, days in the market, all in line with the state. And the sale to list price ratio is 101.5. That basically means that out of all the houses that sold in June in SoCal, the home sellers sold their houses for 1.5% more than an asking price on average. In the Central Coast region of California, home sales absolutely tanked, down 26.3% compared to the state's average of 21%. Meanwhile, home prices increased by 10.1%. When I mean home prices, I mean the median sold price, of course. That increased by 10.1%. Again, the inventory index and days on the market in line with the state averages. And the sales price to list price ratio, houses on average are basically selling for what the seller is asking for. So if this number was 100.0%, that would mean on average, sellers are getting what they're asking for their houses. In Central Valley, where of course I live and work as a real estate agent here in Sacramento, home sales are down slightly compared to the state average, down almost 20%, and home prices up 10%. Again, all in line with the state's averages, and also houses selling approximately for what the sellers are asking for. In the Bay Area, here's the biggest changes here, because look at this. Home prices only gained 3.7%. That's basically a more normal, historical year-over-year increase in home prices at 3.7%. But look at the gains in these other regions: 8.4% in SoCal, and 10.1% in Central Coast, Central Valley 10%, Bay Area only gaining by 3.7%. So far lower than any other region that they're reporting on here. And meanwhile, the existing home price, the median sold price is $1.4 million. Obviously, quite a bit different compared to the Central Valley, where it's basically $500,000. Also, home sales absolutely tanked there as well, down almost 27% from a year ago. Unsold inventory index, a little bit less than the state average. Days on market in line as well. And the ratio here obviously is more inflated. It's very common in the Bay Area, as I always say this, that houses tend to get listed for far less than they know the house is going to sell for. So it's very common, especially in San Francisco, for houses to sell for well over the asking price. So that's why this ratio is so high here. And in the far north, home sales only decreased by 18.5%. The most affordable region in California here, where the median sold price is only $400,000. And home prices tend to not fluctuate too much in the far north, only increasing by 5.3%. Also, the inventory index and days on the market tends to be a little bit higher than other regions in California as well, in the far north. Okay, let's talk about home sales right now, because this is pretty remarkable here. So sales dipped as the market continued to shift. Home sales, I believe this is a seasonally adjusted annual rate. So at the current sales pace right now, approximately 345,000 houses would be sold on a yearly basis. That's a decrease of 20.9%. But look at this, month over month, home sales decreased by 8.4%. And just for fun, I know this is not really an accurate thing to really do, but look at the analyzed number here. So 8.4 times 12, getting really nerdy here. Look at that, the analyzed decrease for home sales is 100.8%. So at the current pace right now, a decrease of 8.4% from 1 month ago. If you extrapolate that over the next 12 months, that would be a decrease of 100%. So pretty remarkable, though, that regarding the strong decrease in home sales over the past several months here, indicative of a housing market shift. Home buyers have had enough, right? So June 2022, here's home sales by region. This is pretty in line with the past year, really. We tend to have more home sales in Southern California. That represented 45% of all home sales in California. The Central Valley and the San Francisco Bay Area also tend to have approximately the same percentage-wise for home sales. And as you can see here, not a lot percentage-wise in the Central Coast and also in the far north, only representing 3% of all home sales as of June. So here's a funny headline here, and they actually need to change this. It says June 2022 home sale growth by region. But look at every region. Every region decreased by double digits for home sales compared to 1 year ago. So it should say June 2022 home sale declines by region and not by growth. I think they're probably should edit that, because over the past 2 years, we've been seeing a growth in home sales and not so much regarding this giant decrease in home sales from a year ago. And in SoCal, decreasing the most. In the Bay Area, not too far behind as well there. Now, here's something very interesting to note, and this is also a big change compared to the past couple of years, really, because we tend to see more home sales, or the increase in home sales, in the luxury market. So houses that sold for over $1 million and also over $2 million had a big increase, especially compared to about 1 year ago. But right now, take a look at this, because home sales have dropped in every single price segment. This is actually the first time I've seen this, excuse me, in the past, at least the past a couple of years. So houses that sold for less than $300,000 decreased by 48% from a year ago, a decrease by 38% in the range of $300,000 to $399,000. But look at this, the upper range, the luxury market, $1 million to basically $2 million. Home sales decreased by 18% year over year, and over $2 million decreased by 20%. If I had to guess, the tanking of our stock market has a big impact regarding this, because a lot of people who are buying houses over $1 million are using stock to buy those houses or sale of stock. And because the stock market has basically been tanking, we're seeing fewer luxury home sales as well. So here's what I was referring to regarding this giant increase of luxury home sales back in 2021. So in the spring months of 2021, the housing market was absolutely insane. But take a look at this, because home sales over $2 million absolutely skyrocketed back in basically April and May of last year. So back then, sales of houses over $2 million increased over 300% compared to the prior year, which is absolutely insane. And this is one reason why I saw record high home prices in California. But take a look at now. Every single price segment has decreased compared to 1 year ago. And as of June of this year in California, approximately 33.4% of all home sales were for at least $1 million or more. And for houses that sold for less than $500,000, that represented 23% of all home sales in June. In other words, we basically pay to live in California here because we have more home sales over $1 million than home sales of less than $500,000. And to give you guys some context regarding this, the median sold price across the nation right now is approximately $400,000. So here's a pretty eye-opening slide right here for you guys. Pending home sales posted the worst decline since the pandemic shut down. So pending home sales in California for June decreased 40.6% from a year ago. A giant decrease of contracts signed in California here. And basically take a look at this, because pending home sales had basically been decreasing ever since the spring months of 2021, but the trajectory over the past couple of months here is basically going straight down. 41% decrease in pending home sales. But take a look at this, because this is absolutely eye-opening here. Here's the actual note I pulled from the California Association of Realtors website here. It says active listings in June also climbed to the highest level since November 2019, with a month-to-month increase, again, month-to-month increase of 28.8% increase from May. So active listings, which of course is housing supply, increased almost 29% in one single month here in California. Also, active listings or housing supply increased 64% from 1 year ago, according to the California Association of Realtors. So even though we saw this giant increase of active listings compared to 1 month ago, and also compared to 1 year ago, we saw a giant decrease of contracts signed, which is telling me that home buyers are really pulling back about buying houses right now. And this giant decrease of almost 41% of contracts signed compared to a year ago is felt across all price segments. It says here, pending sales shrunk from last year at all price segments for the first time in 2 years. And here's a graphic depiction showing the change in pending home sales compared to 1 month ago. So as you can see here, every single price segment decreased compared to 1 month ago for pending home sales. But what really stood out to me the most was the biggest decrease was actually from the luxury market. So houses in orange here that are pending in the range of $1 million to $2 million, and also for houses that are in pending status for over $2 million in dark blue right here. The biggest decreases right now we're seeing in as of June 2022. In stark contrast, houses that sold for less than $300,000 decreased the least. And you actually can see that when looking at this graphic here. So here's June 2022 pending home sales, a month-to-month change. In other words, May 2022 compared to now. So pending home sales for over $2 million actually decreased 16% from 1 month ago. In the range of $1 million to $2 million, decreased by 18%. And also houses that are in pending status in the range of $750,000 to basically $1 million, decreased by 19%. In stark contrast though, houses for less than $300,000 only decreased by 2%. And for closed home sales, these are closed escrows. Look at this. Houses that sold for more than $2 million decreased by 18% from 1 month ago. And this, of course, is the biggest decrease compared to all price segments here in California. So let's have a look at home prices in California right now. So the median sold price in California in June actually decreased from the all-time record highs that we saw in May. So right now, again, the median sold price is actually just under $864,000. But look at this, decreased by 4% in one single month. And just for fun, again, that'd be what, 48%? Yeah, decreasing by 48% on an annualized basis for home prices in California. And also compared to 1 year ago, only increasing by 5.4%. And prices for condos and townhomes in California also decreased from the all-time record highs that we saw last month as well. The median sold price for condos and townhomes is $660,000 compared to $600,000 from 1 year ago. And the price per square foot is also leveling off. Right now in California, it's $424 per square foot. That's an increase of 8.4% year over year, but it has decreased from 1 month ago when we had all-time record highs here in California. And meanwhile, the sales price to list price ratio in California again is 101.3%, decreased by 2.1% compared to last month though. And take a look at this because the ratio here has basically been over 100% ever since basically the last half of 2020. But now it's going downward here and approaching 100%. And again, what this basically means is that home sellers were selling their houses for 1.3% over their seller's asking price on average in June of this year. All right, so take a look at this because here's another alarming trend we're seeing right now. This is the share of houses that are selling above the asking price. So right now, at least for June 2022, it's actually just under 59% right now. But look at this giant decrease compared to 2 months ago. So 2 months ago, that share was basically at an all-time high of 72.8%. So 2 months ago, approximately 73% of houses that sold were selling for over their asking price. So in April, just 2 months ago, that share was 72.8%, which was an all-time record high going back to at least 2017. So back in April, again, just 2 months ago, approximately 7 of every 10 houses sold above their asking price here in California. Now it's just under 59%. It's pretty remarkable seeing this giant shift in our housing market in a very short period of time, of course, because of housing affordability due to rising mortgage rates. And speaking of rising mortgage rates, for June, the average 30-year fixed rate mortgage was 5.52%. Compare that to 1 year ago, it was actually about 3%. And this is why we're seeing a strong pullback in home buying demand right now. Okay, changing gears slightly, let me give you an update regarding housing inventory in California right now. So inventory is improving but remain tight. So as of June 2022, the month supply is 2.5 months. 1 year ago, it was 1.7 months. So historically speaking, yes, very, very low at 2.5 months. I mean, back in 2014 all the way until 2019, we had approximately, 3 to 4 months of housing supply. Now it's 2.5 months. What I'm more focused on, though, is the pace of this increase that we've been seeing, because we basically had all-time record lows back in January. I think it was about 1.5 months, if I'm not mistaken. Now it's 2.5 months. So a very big jump in a very short period of time, which is something I'm definitely paying attention to, and not so much regarding historical averages, because if we move from all-time record lows to historical averages, that would be a giant increase. And speaking of that, housing inventory in California reached its highest levels since late 2019. Again, 2.5 months housing supply. Active listings also reached their highest level since late 2019. As you can see here, active listings, which of course is housing supply, has increased greatly over the past few months here in California. The current levels right now are far higher than any other month we had in 2021, and also higher than in 2020 as well. So remember when I said that pending home sales or contracts signed decreased about 40% compared to 1 year ago? Take a look at this, because active listings increased 64.4% in one single year, absolutely skyrocketing this year, especially over the past few months. A giant increase that we have not seen since at least 2015, because look at 2018. the year-over-year increase of active listings were actually under 40%, and now we're at 64.4%. Absolutely insane. And because we're seeing this giant increase of active listings in California right now, we're going to be seeing more price reductions, and also we're going to be seeing home prices decrease in the second half of this year. And speaking of housing inventory, take a look at the number of new listings. This is a measure of when a home seller lists their house for sale. It says here new listings are the highest in the nearly 3 years right now. In June, we had almost 27,000 new listings hitting the market in California, higher than in 2021 at this time, also in 2020, and just below levels in 2018 and 2019, because at that time we had approximately 28,000 to 29,000 houses listed for sale, and now it's just under 27,000. And the current levels right now is about 7% higher compared to June 2021. Okay, changing gears again, let's talk about market competitiveness in California. So days in the market is at 11 days for June 2022. Compare that to 1 year ago, it was 8 days. So historically speaking, 11 days on the market is still very, very fast. And by the way, these are only for sold houses. So this is a lagging indicator of our housing market. But historically speaking, of course, very, very low. Compare that to 2010 to 2012 approximately. Look at that. The days in the market was basically over 40 days and reached a peak of about 65 days back in the last half of 2010. So obviously compared to 2010 and compared to the past 10 years really, 11 days on the market is still very low, but the trajectory here is going up. So remember when I said we had a giant increase of active listings and a giant decrease of contracts signed, and that's going to be causing more price reductions. Here's a very timely graphic here because here's a share of listings with a reduced price. In other words, the home seller reducing their asking price in order to get their houses sold. So right now, the share of listings with price reductions is 35.5% in June of this year. And the median reduction amount that home sellers are reducing their asking prices by is 5.3%. But have a look at this because right now, again, 35.5%. Look at this trajectory here, basically going straight up ever since basically at the start of this year. So basically at the start of this year, the share was approximately 20%. And now we're at approximately 35%, approaching levels we've seen back in 2019. And obviously the levels we're seeing right now is far higher than 2021 and also in 2020 as well. So comment below with your biggest takeaways from today's video. Also, if you got any value of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.